last 1 year. But these disruptions have also made us resilient as an enterprise, as an economy, and most importantly, as a nation.
From the uncertainties that followed the lockdown last year, we have traveled a long way together. Who would have thought that 1 year on, the stock markets would be at a record high, foreign money into India's financial markets and the startup economy will come back in full gloom. India's manufacturing sector will start revving up, growth would start making a comeback, and India's vaccination drive will already be underway.
The future holds promise of new opportunities for India and for Indians. We must step forward and claim this decade as ours and ours alone. Times Network is truly proud to host some of the brightest minds in India to opine on the theme of India Economic Conclave 2021, India's Decade, Reform, Perform, Transform. Let's take a look.
Welcome to the 7th edition of India's landmark economic forum, Times Network India Economic Conclave, the nation's largest platform for positive action, championed by India's most influential television network, Times Network. Conversations that start here become the talk of the nation. Year after year, IEC has been defining India's economic agenda for growth and prosperity. This year, as India enters a new decade, emerging from the fallout of the COVID-19, it is time to recalibrate India's growth trajectory and set our sights on achieving pivotal national aspirations. It's time to make this decisive decade India's golden. We'll take a deep dive into critical domains and address core challenges faced by the nation across numerous insightful discussions and thought-provoking conversations. We will look to establish the roadmap for India's prosperity for this decade. We will uncover areas that need reform, sectors where we need to perform, and domains that can transform the nation so that India can claim its rightful place at the global high table. It's time to come together and make it a defining decade for the nation. It's time to witness the architects of India's future. It's time for India Economic Conclave.
Ladies and gentlemen, before we proceed, let us mark the ceremony with the lighting of the lamps, an auspicious tradition for good beginnings. Let the light of our intellect take us beyond darkness and towards a higher purpose.
I'd like to invite on stage tennis legend Andre Agassi, along with MD and CEO of Times Network, Mr. M.K. Anand, Navika Kumar and Rahul Shivshankar, from Times Now, Nikunj Dalmia, ET Now, as well as Vinay Tiwari of Mirror Now. Mihir Bhatt, also joining us, Chief Editor, IPs at the Times Network.
Thank you, gentlemen. MK, may I now request you to stay on for your welcome address.
Good morning, everyone. On behalf of Times Network, I welcome Mr. Andre Agassi, Chairman and Founder of the Andre Agassi Foundation for Education, Sri V. Vaidyanathan, MD and CEO of IDFC First Bank, esteemed dignitaries and guests to the 7th edition of India Economic Conclave. Before I start, let me remind you that today marks the completion of 1 year of the great Indian lockdown. Last year, it was 24th night that it was announced, and today morning onwards, we went into a complete lockdown, and that stayed like that for about 4 months in various parts of the the various states of the country, and we've sort of slowly come back to life from, I think, around September or so. So there are decades which pass by where nothing major happens, and then there are a few months where decades happen. The last 1 year has been the most tumultuous for the human race in recent memory, and yet the sense of hope here in India, as I speak to you, has never been stronger as it is today. Despite challenges that we have faced last year, India is quickly emerging to be a bright spot globally. The economy has, albeit with some bruises, managed to take the pandemic in its stride. In hindsight, the prudence with which the government unveiled stimulus in a measured manner without wrecking its finances turned out to be the right step at the right time. We at Times Network believe that this is the dawn of India's decade, that we are poised for stellar growth, and it was for this reason that we identified much earlier than anyone else that the resilience and strength of India will serve us well in this period of flux. And true to our faith, the numbers are telling us that a vibrant recovery seems to be in store. Economists see a lesser GDP contraction than earlier estimated. In fact, at 12.6% GDP growth for FY22, the OECD's economic outlook pegs India as the fastest growing economy in the world. The stock markets have been unfazed by the pandemic, with Nifty clocking over 70% return in this financial year, thanks to a deluge of money, both foreign and domestic. India was very clearly on the radar of top foreign funds this fiscal. We are proud to boast of a thick cushion of Forex reserves to safeguard against external shocks. With $580 billion, India now has the 4th largest reserve, next only to China, Japan, and Switzerland. We have seen a sustained momentum in GST collections, holding well above the 1 lakh crore rupee mark month on month. Clearly now is the time to start shining. India's meteoric improvement on the ease of doing business, now at a respectable 63rd position, was one of the hallmarks of the last decade. It sent out a message that the country means business. It shows the intent to unclog bureaucratic bottlenecks and cut red tape. Between 2014 and 2019, India has moved by 79 positions upwards. India's manufacturing is for the first time attempting to unshackle itself, bravely looking outwards. The Atmanirbhar initiative has the potential to fire up growth, jobs, and FDI. Car makers, consumer electronics, pharma are some of the sectors that are leading the Make in India dream. The startup ecosystem is also booming, and chances are that we are not too far away from getting to the dream number of 100 unicorns from this country. Here too, our entrepreneurs have found opportunity in adversity, and sectors like healthcare and education technology are seeing investments like never before. Ladies and gentlemen, this is the 7th edition of India Economic Conclave. In each of the past years, this conclave has set the agenda for policy making in India. Groundbreaking ideas have emerged from industry leaders and entrepreneurs, supported wholesomely by government's top officials. This year, with the brightest of minds gathered here, I believe that IEC will set India's economic agenda for the next decade. And I have no doubt that it will be a golden decade where we will surpass goals and reset expectations. The COVID crisis has caused tremendous disruption, no doubt, but it has also presented a unique opportunity for India to grab global market share, to become a leading light in the days and years ahead. And it is up to each one of us here to contribute to that glorious future. As the Prime Minister says, Atmanirbhar Bharat is not just policy, it is the national spirit of India. The onus is on each one of us here, the stakeholders and the agenda setters alike, to take it to the next level. With reform being undertaken at the highest level like never before, and demand and earnings clearly visible for all to see, India's transformation and metamorphosis into an economic champion is now imminent. I hope you will have a fruitful and useful 2 days and go back with better perspectives and ideas to face challenges with renewed vigor. Thank you all.
Thank you, MK. Now, we're hosting this conclave at a time when, despite a massive vaccination drive, the pandemic is once again showing signs of resurgence. The Prime Minister himself has appealed to all states to curb a second wave. But hopes of an economic recovery have still not eluded us. And to that hope, we owe our best efforts.
In fact, over the next 2 days, you will be hearing from some of the most insightful speakers, discussions, opinions, and a vision for a new India. This conclave will try and present to you a picture of India by the year 2030. So without taking too much of your time, I'd like to introduce to you our next speaker. He left a bank, created a new company called Capital First, and converted it into a bank once again by merging with an existing bank, and it became IDFC First Bank. For this unique achievement, he's been called the Sandy Whale of India and creator of India's first MBO bank. He sees India from many quarters. In fact, I'd like to now welcome Mr. V. Vaidyanathan, MD and CEO of IDFC First Bank, to address the theme of the conclave.
Good morning, ladies and gentlemen. It's a great pleasure for me to be here on behalf of IDFC First Bank, to be here on this very important subject that has been given for this event called India's Golden Decade, Reform, Perform, and Transform. So thank you very much, Times Network, for thinking through of such a good subject line that's quite inspirational in itself. Now, when we think of this subject, I try to think to myself, what is really going to transform India over the next decade? Because decade is sometimes inspirational because it gives you adequate time to do what you really want to do, but sometimes looks too far and may not even give you the urgency to do it here and now. But for that, India should always remember that, post-independence between 1940s to 1990s, let me say the first 50 or 60 years, we definitely fell behind a large number of East Asian countries who sprinted far ahead in free markets and capitalism, and we were just shackled by a lot of old age ideologies like socialism, which really pegged us really very back. Now, therefore, we should know that we are behind, and therefore there's need for us to sprint very much ahead, and that should keep us on our toes all the time. Now, when we think of entrepreneurship, I think entrepreneurship is going to be the key item, the key agenda item for the next decade, and that has the power to really transform India ahead. And when we say entrepreneurship, we don't mean only the 5,000 odd companies that are there in the listed companies on the exchanges. We see them every day on television channels. We see their performances, and they're all pretty much important because they're all creating jobs. They're organized sector. And they are creating production of goods and services. They're creating supply chains. Economic activity all around. They're all important. And therefore, we got to figure out how to make the life easier and better, and how to channelize the energies, and how to bring the so-called animal spirits. We need them all. But today, I want to just share with you, a video which brings out the kind of entrepreneurship that is available in the bottom of the pyramid. And therefore, later in my speech, I'm trying the theme of this discussion to say that we need to power up entrepreneurship through reforms, both at the top of the pyramid, of course, which we have to do, and also at the bottom, if you can kindly look at this video. Thank you.
சார் எனக்கு ஃப்ளாட் இருக்குங்க சார். இப்போ நீங்கள் கொடுக்குற மற்ற போதும் சார் எனக்கு ஒரு ரூம் ஹால் கட்டினா 5 லட்ச ரூபா போதும் எனக்கு.
அப்படியா?
போதுங்க சார் எனக்கு அதுக்குள்ள
ரூம் ஹால் 5 லட்சம் வந்துடும்.
ஒரு கிச்சன்.
ஸோ இதே கட்டுற இன்ஸ்டால்மெண்ட்குள்ள நீங்கள் சார் வாடகைக்கு வந்து லோன் கட்டிடலாம். ப்ராஃபிட் நமக்கு ஆகிடும். சரி, நெக்ஸ்ட் யார் வாடகை வைப்பீங்க? நீங்கள் வாடகை வைப்பீங்க. உங்களுக்கு எவ்வளோ வாடகை கட்டுறீங்க? 3000. 3000 லோன் போட்டு கொடுத்தது 3 லட்சம் வரும். 2 லட்சம் வரும். 2 லட்சம் உங்களுக்கு கையில் கொடுத்தா நீங்கள் என்ன பண்ணுவீங்க? என்ன வீடு கிடைக்கும்? அதுக்கு
வீடு கிடைக்க கஷ்டம் தாங்க சார். இடம் வாங்கி கட்டணும்னா கொஞ்சம் கஷ்டம்.
கிடைச்சிடுங்க, அந்த அமௌண்ட்டே கிடைச்சிடுங்க. வேறு யார் கை தூக்கினீங்க?
ரெஸ்பான்ஸாக எங்களுக்கு பண்ணுறாங்க. லோன் வாங்க போனாலும் எங்களுக்கு லோனும் கொடுத்து அன்னதானமும் கொடுத்து எங்களை பெருமைப்படுத்துகிற அளவுக்கு பண்ணி அனுப்புகிறாங்க. அதனால எங்களுக்கு ஐடிஎஃப்சி ரொம்ப
இப்போ கொடுத்த கையில் 1 லட்சம் கொடுத்தா எவ்வளோ பேர் வாங்க தெரியும்?
பையன் பிசியோதெரபி டாக்டரா இருக்கா சார். அவனுக்கு எக்யூப்மெண்ட்ஸ் அந்த ஜாமான் அவங்களுக்கு கொடுத்தாங்க பயன்படுத்தி.
எக்யூப்மெண்ட் வாங்க அவனுக்கு பணம் வேணும். உங்களுக்கு எது பணம் வேணும்? அரிசி கடைக்கு பணம் வைக்கணும். உங்களுக்கு அரிசி கடைக்கு கை மேலே வச்சுக்கோங்க 1 லட்சத்துக்கு. உங்களுக்கு எது பணம் வேணும்? என்ன பண்ணுவீங்க? எவ்வளோ வேணும்? 1 லேக் வேணும். எதுக்கு வேணும்? மளிகை சாமான். கரெக்ட்மா, சாமான் தலை சாமான் எதுக்கு 1 லட்சம் ரூபா வேணும்? இருக்கு புரிஞ்சு உங்களுக்கு கை கொடுக்குறீங்களா? உங்களுக்கு எதுக்கு வேணும்? உங்களுக்கு எதுக்கு வேணும்? வீட்டுக்காரங்க எந்த வண்டி வாங்கணும்? ஆட்டோ வாங்கணும். ஓகே, உங்களுக்கு எதுக்கு வேணும்? உங்களுக்கு எதுக்கு வேணும்? கார் வாங்கணும்.
ஆட்டோ வாங்கிட்டு இருந்தாங்க சார்.
சரி,
கார் வந்து ஸ்கூல் வேன்ல இருக்கிற மாதிரி வாங்கலாம்னு ஒரு பிளான்.
ஆனா 1 லட்சத்துல கார் வராது.
இல்லை சார், நாங்கள் கொஞ்சம் பணம் வச்சிருக்கோம்.
நீங்க எவ்வளவு போடுவீங்க? அந்த
நாங்கள் ஒரு 150 வச்சிருக்கோம்.
150 நீங்க வச்சிருக்கீங்க. நான் 1 லட்சம் கொடுத்தேன்.
நாங்கள் புதுசாகவே எடுத்துருவோம் சார். சாதாரணமாக மிடில்
1 லட்சம் கொடுத்துருக்கு. அது இன்ஸ்டால்மெண்ட் 3500 ரூபா வரும்.
அது கட்டிடலாம் சார்.
கட்டிடலாம். பிசினஸ் லோனுக்கு உங்களுக்கு எதுக்கு வேணும்? பிசினஸ் லோன்
டைலரிங் கடை.
டெய்லரிங் கடைக்கு. எதுக்கு டெய்லரிங் கடைக்கு?
மிஷின் வாங்க, எம்ப்ராய்டிங் மிஷின்.
எவ்வளவு ஆகும் எம்ப்ராய்டரி மிஷின்?
அது மிஷின் மட்டுமே எம்ப்ராய்டிங் மிஷின்.
ஓகே, உங்களுக்கு எதுக்கு வேணும்?
மளிகை கடை சார்.
மளிகை கடை. எவ்வளோ அதுக்கு? மளிகை கடை என்ன பண்ணுவீங்க? அதுக்குள்ள ஆல்ரெடி உங்களுக்கு மளிகை கடை இருக்கா? அதுக்கு அதுக்கு 1 லட்சம் என்ன பண்ணுவீங்க?
நாங்கள் வந்து இப்போ வந்து ஒரு 10 கிலோ அப்படி வாங்கி சேல்ஸ் பண்ணிட்டு இருக்கோம்.
இல்லைம்மா,
10 கிலோ அப்படி வாங்கி சேல்ஸ் பண்ணிட்டு இருக்கோம். நீங்கள் 1 லேக் லோன் போட்டு கொடுத்தீங்கன்னா சிற்பமாக இறக்கிடுவோம், நம்ம மூட்டையாக இறக்கிடுவோம்.
ஆனால் மாதம் ஒரு 4000 ரூபாய் கட்ட முடியும்?
கண்டிப்பாக முடியும் சார்.
கண்டிப்பாக முடியும். உங்கள் ஃபேமிலியில் யார் இருக்காங்க?
நான், ஹஸ்பண்ட், பேபி.
ஹஸ்பண்ட் என்ன பண்ணுறாங்க?
அவங்க 2 பேர் சேர்ந்து தான்
மளிகை கடை பண்ணுறீங்க. நீங்க என்ன பண்ணுவீங்க? 1 லட்சம் வச்சு கொஞ்சம் நீங்க
சத்தமா
கொஞ்சம் குரலே உங்களுக்கு
எல்லாம் சவுண்டா பேசுங்க.
ஹஸ்பண்ட்க்கு ஓன் பிசினஸ்க்காக அந்த திங்ஸ் எல்லாம் வாங்குறதுக்காக அவர் வந்து கார்பெண்டரா இருக்காரு. இப்போ வந்து ஒர்க்கரா தான் பண்ணிட்டு இருக்காரு. ஸோ சொந்தமா ஓனா எடுத்து பண்ணலாம். வுட் பாலிஷ் பண்றாரு, கான்ட்ராக்ட்ல வேலை செய்யறாரு. ஸோ அதை நாங்கள் சொந்தமா.
வேற யார் கை தூக்குறீங்க? நெக்ஸ்ட் நீங்க தூக்குறீங்க எல்லாரும். நீங்க என்ன பண்ணுவீங்க?
ரீவெண்டிங் வச்சிருக்கோம் சார். எலக்ட்ரிஷியன் கடை வச்சிருக்கோம். ரீவெண்டிங் ஃபேன், மோட்டர், காயில் கட்டர்.
இந்த காயில் வச்சு சரி.
சிம்னி கேஸ் அடுப்பு சிம்னி போடுறோம். அதெல்லாம் எங்களுக்கு சேல்ஸ் பண்ணுறோம். நான் காயிலெலாம் கேட்டேன்.
கரெக்ட்மா. லோன் வச்சு என்ன பண்ணுவீங்கன்னு கேட்குறேன்.
மிஷின் வாங்குவோம் சார். ஒரு மிஷினே 60,000 70,000. ட்ரில் மிஷின் வாங்குவோம் சார்.
சரி, இன்னொரு கொஸ்டின் கேட்க போகிறேன். உங்கள் ஃபேமிலியில் வேற யாருக்காவது, எல்லா குரூப்லையும் யாருக்காவது I just hope you could see the subscripts at the bottom because obviously you won't get the language. But if you see, isn't it amazing that there's a group of about 30 people, all micro entrepreneurs, all wanting to do business. They are not asking for doles. And it is surprising, at least surprising to me, that you ask 30 people, at least 25 of them putting up their hands to borrow 1 lakh rupees. And what are they asking it for? Someone wants to buy a kirana shop. Someone already has a kirana shop, wants to buy one more kirana shop. I ask her why. She says, if I put them together, I'm currently buying in lots of 10 kg. I can buy in larger lots. I can get better discounts. Someone else says, my husband wants to buy an auto rickshaw. Someone else says, I'm in the business of coils, the last lady who spoke out there. And business of, I'm doing motor winding business and I will repair Someone says, I want to buy a bus. Why do you want a school bus or a van? So that I can ferry children to school and back. Just think, among 30 ladies out there, 20 of them want to do business and they want to borrow 1 lakh from you. Now multiply this across the country and how many millions of people are waiting to borrow 1 lakh rupees from you. And if you fire up all of those entrepreneurs across the country, how much we can do? We've been spending 50,000 crores of losses on on our airlines business for the last 10 years, 50,000 crores. On some telecom companies, we've been wasting, I don't know how many thousand crores, maybe 30, 40,000 crores. Now for that amount of money, you give them 50,000 rupees, forget 50,000 crores. And they're willing to fire up a business out there and they'll employ 1 or 2 people each. We do financing like this for goats, cattle, cows, and people who do milk and all business and all that stuff. Some other day I'll show you that video. And by the way, this is a 1-hour interaction. I showed you just 3 minutes of that. And in that 1 hour, we explored so much about their lives and what they need and what they have and what children. And, by the way, we went to some of their houses. The parents, who are probably till 70, 75 years old, are also doing some activity till the last day of their lives to earn. That's the kind of entrepreneurship that is existing in these ecosystems. Now we, as a nation, will, during this 2020 to 2030 that we're putting together for ourselves, will need to fire up this part of the ecosystem. It's very, very, very important for us. If we don't do this, we will keep giving money to the top of the pyramid and hope that they will produce activity, and they will, by the way, and we hope that it will keep trickling down. But trickling down is trickling down. It trickles very, very slowly. We will need very direct intervention bottom of the pyramid, and we have to cut out all the waste of thousands of crores that is getting wasted every year in many of these enterprises. Now, when you think of the classical factors of production, because GDP is production. So factors of production, these are the classical ones, right? Land, labor, capital, and entrepreneurship. In India, land is expensive. You can try. Land in Mumbai is no lesser than land in New York. Land is expensive. Labor is not expensive, but we have tied it up with so much of red tape and well-intentioned policies which have actually backfired in growth of the labor market. And that's tied up in its own tape. Capital, which is plant and machinery as well as financial capital, that's also expensive because of inflation. If land, labor, capital is expensive, but still, amazing thing is the entrepreneurship is firing in this country out of the four factors of production. So therefore, the big way for India to progress going forward is to fire up these 3 and work on reforms on land, labor, and capital in a very big way. Now, if you go to work on these, in the new ecosystem, it's not land, labor, capital. In the new ecosystem, as all of us know, you could be working in India and working for a Facebook or a Google or Amazon, and therefore even visas will become irrelevant in the years to come. So therefore, that ecosystem with the new definition of the factors of production will all have to get fired up for a new reformist economy to come alive. I want to just tell you the impact of GDP and how it will affect our lives even going forward. Not that you don't know, but I will just put it in context for you. In 2000, year 2000, in the turn of the century, our budget spends was 2.9 lakh crores. In 2010, just 10 years later, the budget spent by the government of India was 10 lakh crores. In 2020, budget spent by the government of India in the annual budget was 27 lakh crores. Now think about it. Population between 2010 to 2020 has grown by about 11-12%. But the amount of budget allocation by the government in spends has gone up by 170%. What does that mean? That incrementally every year, you're able to spend much more money. Now, spending also, this government is doing very differently than the past welfare economics, and it's very important. Now, if I'm the government of India, I have 7 lakh crores. I could, of course, make all the poor people happy by saying, you take money, you do farm waiver. But no, this government is saying, I'll build roads, I'll build bridges, I will do infrastructure. They want to invest 100 lakh crores in infrastructure. By the way, that also is going to the poor person. You might ask how? Because some contractor has been employed for putting this road. That contractor has employees. That employee is getting paid. And that employee in turn is probably going and buying some biscuits or something from these very people. And therefore, the money reaching the system is still the same, but at least you have a road to show. And that road is going to fire up production and fire up, productivity in the time to come. So therefore, the current government's the method of spending the money by using it for creating infrastructure and letting it flow through the ecosystem to reach these people's hands and fire up their own entrepreneurship, which if we can fire by giving more impetus at the bottom of the pyramid, it is by itself a very productive cycle. Government gets taxes. Government should, this government, again, I have found something very interesting, that they're saying we don't want to be in business where we don't have to. Now, it's a very important statement. No one has said that so boldly. Look at this privatization agenda that came in this budget. I thought it was the most reformist statement ever made to say, look, we will privatize 2 state-owned banks. Who has ever said that? It takes unbelievable political courage in this country to do that. Look at the way we said the farm reform. Imagine you're going to affect maybe 600 million people. All for the positive. Maybe, there are protests going on by some ill-informed or misadvised people. But look at the reform. The reform is you produce it anywhere and you can supply it anywhere, you can sell it anywhere in the country. I mean, today you're holden to one particular mandi, you can sell it anywhere. Now, it's the most ultimate reform. So therefore, and these are agriculture, where any miscommunication can completely disturb people's minds. So the role of the government has now switched over, which is a landmark moment from the country, is to say private sector will fire up the economies, we will do reform, and that is what really the government has to do. And it's a pace that is really unbelievable, because every day matters. I told you we're maybe 30 or 40 years behind in the way we had a slow start after independence. The other thing that we hear the government says that creating wealth is good. If we don't have wealth, we can't distribute to the poor. Basically the model is you make the money, you pay your taxes, and with those taxes we will do welfare activity, and you have your role, I have my role, and my job is to facilitate. I think to fundamentally understand this role, say it clearly, internalize it, tell all the bureaucrats of this bank, of the government, to say this is the way we're going to work, I think it's a very bold thing. And I don't think any government has said it so directly, so bold before. And I think that fundamental shift is the reason we can feel very, very positive about the country going forward. Now, we also talk of ease of doing business. We also talk of micro reforms. We are all talking about macro reforms, land, labor, capital, and farm, and all that. But and GST was a mega reform, because so many lobbies were talking about the fact this is not the time. Can we wait for 1 more month? Can we wait for 3 more months? Frankly, if you had missed that window, God knows whether GST would ever been passed at all or not. It took an entrepreneurial government to come and say, look, I'm doing it, this is the deadline, we're launching it, and then we'll figure out how this goes, we'll fix the problems along the way. So therefore, these are the things that are making us feel very positive, that there's a government that is really firm, strong, majority, reformist, right-wing thinking, free markets. There is only one big clause we should every government should be very careful about, is to say that we are not going to create monopolies and we are not going to create cronies. And if we avoid that part of the process, which I'm sure our government is very conscious about, then we are all set for a mega bull run in the years to come. I didn't mean from the stock market, but bull run from the point of view of their lives, which is really not the stock market lives. Now, I also want to then point out to you apart from the macro reforms that the government has done, from the RBI point of view, the way they reacted in the pandemic was really unbelievable. And TLTRO1, targeted LTRO2, restructuring proposal, OMO, Operation Twist, CRR reduction, LCR reduction, marginal standing facility increased. all those bullets kept firing one after the other at the problem. And I think they were happening in very quick succession. From the government point of view, when this pandemic was going on and they were giving out, the kind of benefits that they were giving to the poor, at the same time, agri reform, at the same time, mineral reform, at the same time, let me say, all the other reforms we talked about. So it just gives us confidence that if this kind of momentum sustains for 2, 3, 5 years, the power of compounding, you really can't imagine where that will take you. I come from the banking system, to close my note, and therefore, from the banking system point of view, let me tell you some numbers, and that will quite surprise you. In 2010, the entire credit market of the Indian banking system was only 28 lakh crores. 28 lakh crores. Today, the credit outstanding of the Indian banking system is 110 lakh crores or thereabouts. That is 2020. In 10 years, it's gone up by about 3 times. When you think of the deposit market was about 35 lakh crores in 2010. Today, the deposit market in India is about 140 lakh crores. That's again 3x. If you see the mutual fund market in 2010 was about 7 lakh crores. Today, mutual fund market is about 31 lakh crores. That's about 4.5x. If you think of the insurance industry, it lost its way for the first 5 years of this decade, but last 5 years they've been compounding at 15% per annum. So therefore, if you see any market, last 10 years has multiplied by 3x. 3x. While the growth has grown by, population has grown by about maybe 10% or 12%. So you can see the incremental value addition to the people that is happening. And in this 10 years, mind you, for the first 4 years, we saw high interest rates, high inflation of 8-10%. In 2014, we saw elections. In 2016, we saw reform of demonetization. In 2017, we saw GST, which changed a lot of things for small entrepreneurs, which is a disruption. Then in 2020, we saw COVID. After so many problems, it multiplied 3 times. And therefore, it gives us the confidence that if there's any more roadblocks coming along the way, if we do reforms and if we keep powering ahead, we can again multiply 3 times. What is today 110 lakh crore market can become 330 lakh crore market. And you do this maths for home loans market, car loan market, commercial loan market, everything the story holds. So therefore, when we say that India's GDP today is, say, $2.8 trillion, after what it came down last year, if you compound it by 15% next year, maybe 12% by popular consensus and 3%, 4% inflation, that's 15%. And every year after that, if you compound it by 11%, which is 8% real, 5% inflation, and minus 2% for inflation for the rupee depreciation, you will find that still this $3 trillion will compound to $8 trillion by 2030. $8 trillion. 60% of this consumption. So you add about about $5 trillion will be consumption. And $5 trillion, can you imagine the power of $5 trillion consumption coming? So like 2030 could look like crazily different than what it is today. And every year the government from that time can bring more people out of poverty because tax collection will be again maybe 3 times what it is today. And maybe budget spend instead of being 30 lakh crores is probably 100 lakh crores. And can you imagine what it can do to the nation? Now, I read a report this morning in one of the newspapers, Business Standard, which talked about the fact that, they published Bank of America's research report. In the Bank of America's research report, they said that India has overtaken Russia in GDP in 2014, Brazil in 2015, France in 2018, UK in 2019, Germany, Japan is ahead of India, and they predict it will happen in 2028 and 2030. And therefore, by 2030, India will definitely be India's world's 3rd largest nation. My wish is that it's very simple, that we need to fire up entrepreneurship. We saw that at the bottom of the pyramid. By the way, they're all well-paying people. Their NPAs are hardly anything. It's better than the large corporates and all who have probably defaulted, taken away 15-18% NPA. These people are running at practically 1 or 2% NPA. So you might as well give them money, and you're better off, firing that entrepreneurship. So the point is that we need to do macro reforms. We need to support this ecosystem in a direct intervention way, and together together, when we say a golden decade, it can be a golden decade for all, and particularly this segment of population, which needs faster firing up. I just hope the children of these ladies we saw today are not again hoping and wishing to do welding activity and tailoring and embroidery and auto rickshaw. If we really fire up that ecosystem in an interventionist way, not a money way, giving them education, skills, training, that kind of stuff, they could be talking of AI, ML, they could be talking of software codes, they could be talking of AR, VR, virtual recognition, and so on and so forth. They can talk really bigger things, and that is really value add, because the multiplier effect of wealth by doing value-added jobs in the lower end of the ecosystem will be really multiple for the economy, and that's what we should be aspiring for. I do hope, with the kind of approach this government has towards supporting the lower end of the ecosystem, I do hope we get there. Thank you very much, ladies and gentlemen. Thank you. Bye.
Thank you, Mr. Vaidyanathan, for setting the context of this conclave. As India gets ready for its tryst with destiny, we have joining us in just a few moments, Mr. Shaktikanta Das, the Honorable Governor, RBI. He will be delivering a keynote, followed by a session with ET Now's Managing Editor, Nikunj Dalmia. And this is a much-awaited session here at the conclave today, Ruchi, particularly with the economy going through the phases that it is, and given that we're on the verge right now of a possible second wave, all eyes really on the kind of direction possibly coming from the RBI.
Oh, absolutely, and which is why this address by the governor is going to be very important, because we really want to hear from the governor his vision for India and where things are headed in terms of the Indian economy from here. And Abha, if you look at the entire situation and the crisis that the Indian economy went through, it really left no room for errors, and which is why the policy stance that the government took during this time was so important.
Absolutely. And while industry has been lauding the government's efforts to support the economy, and particularly post the budget, the RBI has also been working in sync with that. But it'll be interesting to see now where to from here, given the global scenario as well, given the kind of trend that we have been seeing on rates and also liquidity.
Well, they call it the jugalbandi with the RBI, isn't it? In fact, not just that, while many developed countries took an approach of giving in and throwing in the stimulus far too early, if you look at India, we've been waiting patiently, we've taken calibrated steps, and here's hoping that all this rewards us in the future, isn't it?
Absolutely. Well, this is going to be one of our signature sessions today, and we're just waiting for the governor to be connected, and of course, given that we are currently in the midst of the pandemic still, we have really requested everybody to be strict in following those COVID protocols, as was announced earlier as well. So please do continue to wear your masks and maintain social distancing, even while you're around the hotel and, of course, in the hall. And in light of that, of course, is also why we've had the governor joining in remotely today.
Oh, absolutely. And do please share your thoughts, your suggestions, all using the hashtag IEC 2021, Abha.
Okay, well, given that, we also want to get a perspective from different points of view, different parts of the economy and industry. Coming up today, of course, post our session with the governor, we also have a lot lined up for you. We'll also have industry stalwarts, Rajan Mittal, Ajay Bijli, Naveen Jindal speaking to us a little later. And also a special panel with startup specialists and experts as well. But I can see that the governor is seated, Ruchi. Sir, it is a great privilege to have you with us here today. We can hear you and see you loud and clear. And we'd like to hand over to you for the keynote that we've really been awaiting with much eagerness. And of course, the session with Nikunj will follow after that. Over to you, sir.
Thank you for that introduction. And I must say it's great to see a lot of audience in the hall. And in particular, I would like to mention, and it's also great to see the presence of the tennis legend Andre Agassi amidst us. A very warm good morning to you all. It's indeed an honor for me to be here at the India Economic Conclave 2021, organized by the Times Network. I have been looking forward to participating in this event after my participation in this very event, which was held in Mumbai in December 2019. And that experience obviously enthused me to participate in this event once again. The theme of this year's conclave, one which resonates very strongly, is India's decade: reform, perform, and transform. The COVID-19 pandemic has set forth the wheels of transformation for everything around us, from our work life to our policy priorities. As we toil towards addressing the challenges raised by COVID-19 with the aim to emerge as a modern and transformed India, I applaud the foresight of the Times Network in selecting such a pertinent theme. Today, in my address, I have chosen to speak on a subject which is in which the Reserve Bank has a major stake, and that is financial sector in a new decade. Contextually, it is important to bear in mind that unlike the global financial crisis, GFC of 2008, when financial sector vulnerabilities impacted the real sector, this time the risk of contagion is from the real sector to the financial sector. So it is the other way around this time. What I have proposed to do today is that I would first highlight a little bit about the global perspective, then talk about the Indian context, and then come specifically to financial sector. How do we look at the developments in the next, in this particular decade, that is the decade of 2020s. And I would also like to touch upon the activities and the developments taking place in the digital financial space, digital lending and digital banking, etc., with particular reference to digital payments also. Globally, the measures initiated in the last decade after the global financial crisis were aimed at reducing leverage and improving the quality and quantity of capital in the banks, among others. As a result, before entering the COVID pandemic, banks in India and banks world over were well capitalized and maintained high liquidity buffers, which, coupled with moratorium and asset classification freezes, which have been announced by central banks across countries, these helped central banks and the banking system to stay resilient during these tough times. Measures taken by central banks and national governments, such as reducing policy rates, capital liquidity and regulatory relaxations, asset purchases, Forex swaps, and government guarantees, among others, played a crucial role in preventing heavy sell-offs and protecting the balance sheets of banks. This collective endeavor resulted in stabilization of the financial sector and provided necessary liquidity support to maintain the flow of credit in economies across the globe. The rapid progress in vaccine has upgraded the global outlook, although we are not out of the woods yet, as fresh waves of newer variants of virus bring in fresh concerns. And this is something about which we have to be very, very careful and very watchful and take all the precautionary steps that we have been taking over the last 1 year. While the global economy continues to reel under the impact of this unprecedented shock, the near-term financial stability risks have been contained on account of coordinated interventions by central banks and governments across the globe. The present pandemic underlines the imperative of strong capital buffers in the banking system. While capital reforms undertaken post-global financial crisis did provide space to cushion the immediate impact of the current pandemic, banks would need to shore up their capital position, both to absorb some of the slippages as well as to sustain credit flow, especially when monetary and fiscal measures start unwinding. While part of the global regulatory reform agenda is still under implementation, the pandemic provides an opportunity to test and evaluate the efficacy of various reform measures. The learnings from the crisis could throw up new focus areas to be addressed in the design of the international regulatory architecture for banks and other financial sector entities. Turning to the Indian context, we have to note that in the Indian context, maintaining health of the banking sector remains a policy priority. As I have stressed on several earlier occasions, the strength of the banking system depends on building its capital base, while at the same time focusing on corporate governance and ethics-driven compliance culture. Banks, as well as non-banking finance companies, that is NBFCs, need to enhance their skill set to identify risks early, measure them, mitigate the risk proactively, and build up adequate provisioning of buffers to absorb potential losses. They should also augment their internal stress testing framework with severe but plausible stress scenarios. Upgradation of IT infrastructure and improving customer services, together with cybersecurity measures, are other key issues which also need attention. On our part, we have reorganized RBI's supervision of the banks and NBFCs, as well as the urban cooperative banks, UCBs. We have done that under one umbrella and initiated a series of measures to strengthen supervisory oversight on these entities. Our focus is more on early identification of risks, putting in place structured early supervisory intervention framework, and increasing the focus on root causes of vulnerabilities than on symptoms. We are also harmonizing the supervisory rigor across banks, non-bank finance companies, and urban cooperative banks. The Reserve Bank has also been taking steps to provide all-round support to improve the resilience of these sectors. We have taken several measures in the last 1 year, and even before that, I have listed it out in my speech, a copy of which will be uploaded in the RBI website. You could have a look at it, but I'm skipping the list of measures which we have taken, and in the interest of time. Now, turning to urban cooperative banks, I would like to stress that they are registered as cooperative societies and have been under the dual regulation of Reserve Bank and the state and central registrar of cooperative societies. The recent amendments to the Banking Regulation Act 1949, as applicable to cooperative societies, has brought the functions of governance, capital, audit, and amalgamation of cooperative banks under the regulatory domain of the Reserve Bank of India. In the recent period, we have taken a number of measures to improve the governance structure in urban cooperative banks. We have also taken steps to implement system-based asset classification norms and bring them into the CRILIC reporting infrastructure and under the supervisory action framework of the RBI. Last month, we have set up an expert committee to examine these issues and provide a roadmap for strengthening the urban cooperative bank sector. Now, I would like to now turn to the banking sector and the way ahead, especially in this decade from 2020 to 2030. The Reserve Bank is striving towards a more competitive, efficient, and heterogeneous banking structure. The licensing policies for universal banks, small finance banks, and payments banks are a step in this direction. Presently, we have about 10 small finance banks and 6 payment banks which are operational. I foresee going forward, 4 distinct sets of banking landscapes emerging in the current decade. The first set will be dominated by a few large Indian banks with domestic and international presence. The second set will be dominated by, and there will be several mid-sized banks with economy-wide presence. The third set would encompass small private sector banks, small finance banks, regional rural banks, and cooperative banks, which may specifically cater to the credit requirements of the small borrowers. The fourth segment would consist of digital players who may act as service providers directly to customers or through banks as their agents or associates. In fact, digital players would increasingly emerge as critical pieces across all segments. Let me now dwell upon the interplay and synergies that could be exploited by these 4 segments while they compete with each other to move up the ladder. Each of these segments needs to comprehend the future needs of society and respond to the growth in the Indian financial sector. IT systems need to be developed to handle exponential surge in the number of transactions. The example of the Unified Payments Interface, UPI, which took 3 years, that is from 2017 to 19, to register a monthly count of 1 billion transactions, but doubled to 2 billion a month in a short span of another year, clearly stands out in this regard. This demonstrates the need for scalability of systems and platforms in such a way that it can be easily scaled up, not incremental scalability, but exponential scalability. India is on the way to becoming Asia's top financial technology fintech hub with 87% fintech adoption rate as against the global average of 64%. The fintech market in India was valued at rupees 1.9 trillion in 2019 and is expected to reach 6.2 trillion rupees by 2025 across diversified fields like digital payments, digital lending, peer-to-peer lending, that is what we call P2P lending, crowdfunding, blockchain technology, distributed ledgers technology, big data, regtech, and subtech, to name a few. In a world where the fintech companies are leading in terms of volume of digital transactions and playing a more active role in the banking and finance industry, it is important that commercial banks adapt to the technological changes and work in tandem with these entities so that in future they are part of the ecosystem rather than competing with fintech companies for business. A meaningful collaboration and coexistence in providing affordable and efficient value-added services would help both the worlds. From the regulatory perspective, it is the RBI's priority to foster effective regulations with continuous knowledge acquisition so that we stay ahead of the curve. The Reserve Bank's endeavor is to ensure that the regulations do not constrain innovation. Rather, they should encourage and nurture innovation without compromising the need for financial sector stability, cybersecurity, customer protection, etc. Optimality in regulation and supervision is indeed the key. With this objective in mind, we have recently constituted a working group on digital lending, including lending through online platforms and mobile apps. Overall, an orderly growth of fintechs will benefit all stakeholders in the financial sector. While we are on fintech and technology, it would be extremely relevant to touch upon the developments in our payment systems, where India has shown remarkable progress in recent years. As the adage goes, the best way to predict the future is to create it. And at the Reserve Bank, it is our unwavering approach when it comes to, and this precisely is our unwavering approach in the Reserve Bank when it comes to future payment systems. With our commitment to foster innovation and provide state-of-the-art and safe experience to users, we have placed ourselves in the forefront of payment systems on a global stage. India has emerged as one of the leaders when it comes to payment systems, perhaps akin to the recognition in the COVID vaccine front that India has gained. Sustaining this position is both challenging and exciting. The growth rate of Indian payment systems has been indeed phenomenal, creating new records with each passing day. Digital payments volumes in India increased at a compounded annual growth rate of over 55% in the past 5 years, from 5.9 billion in 2015-16 to 34.3 billion in 2019-20, almost 6 times in 5 years. Retail payment systems such as UPI and Aadhaar-enabled payment service, AEPS, have changed the entire dynamics of retail payment systems as they are being used at every nook and corner of the country. Last year, and this is very important, last year when many other nations were writing checks to provide stimulus to the people, we in India processed 274 crore digital transactions. I repeat, 274 digital transactions to provide direct benefit transfer, DBT, to the people straight into their bank accounts. 24/7 and interoperability are two key aspects that are hallmarks of our payment system, and it will continue to be so. Interoperability is the sine qua non if the existing infrastructure has to be leveraged to its maximum and optimum use. RBI's recent initiative in setting up a Payment Infrastructure Development Fund, PIDF, to expand the reach of digital payment infrastructure into less penetrated regions is aimed at making payments more inclusive. The emphasis of the Reserve Bank is on operationalizing all our payment systems around the clock, 365 days a year. And I am happy to say that with 24/7 NEFT and RTGS systems, we are among a few countries that provide the facility to transfer any amount at any point of time during the day and at any point of time during the year. The success of UPI in India has attracted immense admiration from the international community, and several countries across the globe have expressed interest in developing a system on similar lines, which could provide a basis for stronger bilateral business operations and greater economic partnerships. The UPI system also has the potential to unfold into a cheaper and faster alternative to available means for multilateral cross-border payments as well. It would be appropriate to mention that our RTGS, and this is very important, it would be appropriate to mention that our RTGS also has multi-currency capabilities, and with 24/7 operations now, there is a scope, I repeat, there is a scope to explore whether its footprints could be expanded beyond India. With the Reserve Bank at the forefront of nurturing innovation, the day is not far when we will experience cheaper, faster, and safer cross-border remittances. Also, the indigenous RuPay card network has shown astounding growth across strata and has a significant market share. With RuPay having international presence now, our homegrown card network could make a mark in the global financial landscape going forward. The Reserve Bank is intensely involved in developing an ecosystem which would not only nurture future technologies, but also stimulate the technological aspirations of the financial community in India. On these lines, to enable the growth of fintech in India, the Reserve Bank in August 2019 entered into the elite class of select few countries which have their own regulatory sandbox ecosystem, where any regulated or unregulated entity can come and live test their innovative products or services in a controlled environment. This is a collaboration between the regulator, the innovators, the fintech, the financial services providers, and the end users, that is customers, which should ensure that Indian consumers continue to receive the best-in-class financial services. Additionally, the Reserve Bank has also created our own innovation hub, that is the Reserve Bank Innovation Hub. This hub will collaborate with financial sector institutions, technology industry, and academic institutions to exchange ideas and contribute to development of prototypes related to financial innovations. The Bank for International Settlements, that is BIS, and several central banks have also set up such hubs to stay ahead of the curve in technology absorption. While doing all these, we need to be watchful of the risks associated with certain technological innovations. That being said, while we are working on introducing a digital version of the fiat currency, the Reserve Bank is also assessing the financial stability implications of introducing such a central bank digital currency, that is CBDC. As the underlying technology is still developing, we are exploring ways for a clear, safe, and legally certain settlement finality, which is most crucial for a secure and efficient payment system. It also needs to be appreciated that there are not many practical instances of operationalization of central bank digital currencies across the world. This calls for utmost precaution so that we can produce a safe and robust model of central bank digital currency in India. And it is work in progress at the Reserve Bank of India. Enhancing cyber resilience is another important aspect when it comes to digital innovations. As we are expanding our operating hours and allowing for increased access and increased interoperability, There are persisting threats of cyber attacks to our systems. Experience shows that even the most efficient and protected systems can get compromised, which could expose stakeholders to disproportionate risks. The Reserve Bank is constantly creating awareness of such incidents and encouraging banks and non-banks to establish and maintain capabilities to avert such attacks. One must know also how to ring-fence such attacks when they occur and swiftly repair and restore the systems to normalcy. Cyber crisis proofing of systems by undertaking periodic tests as well as drills is indeed very essential. With increased digitization and development of fintech, the traditional ways of credit evaluation are expected to be replaced by new age credit evaluation methods that focus on a slew of non-financial and reliable transactional data. Many fintech firms have already adopted such an approach, but it is expected that in times to come, this may become more mainstream than remaining a niche. This will further facilitate the cause of financial inclusion in India. At the same time, however, it throws up a host of new challenges in terms of concerns of data privacy, consent, and security. Ethical behavior of stakeholders in payments value chain is important to surmount these concerns. Ability of financial sector entities to respond to these challenges may become a key factor. In fact, they are a key factor in the determination of their competitive advantage. Let me now just go to conclude this intervention. You would have seen that I highlighted a lot on digital, on the activities and developments in the digital space, and because that is the future, and both conventional banks, traditional banks, as well as new entities will have a lot to do in this area in the current decade. In the dynamic world of financial services, and more so after the pandemic, fintech is expected to challenge the financial sector with innovations and its exponential growth. Harnessing fintech for customer services will effectively control costs and expand the banking and non-banking businesses. The increased use of digital payments brought about by COVID-19 could fuel a rise in digital lending in the current decade as companies accumulate consumer data and enhance credit analytics. This in turn presents a new and complex trade-off between financial stability, competition, and data protection, and thereby warranting new regulatory frameworks and new ways of monitoring. It is imperative for the financial sector regulators to monitor global developments and formulate policy responses to the risks and the opportunities that are ahead of us. Going forward, banks need to address the financing needs of new sunrise sectors without undermining the traditional sectors of the economy. This conclave gives us an opportunity to look back on what has been accomplished and deliberate on what still needs to be done. I wish to reiterate that we at the Reserve Bank are fully committed to use all our policy tools to secure a robust recovery of the economy from the debilitating effects of the COVID-19 pandemic. The Reserve Bank remains devoted to build an enabling environment to develop the financial sector and create necessary preconditions for growth while preserving price and financial stability. Thank you very much. Thank you for your patience.
I'd like to invite ET Now's Managing Editor, Nikunj Dalmia, for a one-on-one chat with the Governor.
Good morning. Thank you for joining us. My sincere compliments to RBI and to the Governor for managing the COVID crisis, for the kind of measures what Reserve Bank of India has taken during the COVID crisis. They have been indeed great, and they are the reason why Indian financial sector is very safe. Governor Das, while you alluded to the big picture, as a journalist, I'm tempted to first start with the near-term challenges. And the near-term challenge, Governor Das, is that unfortunately the COVID cases have been on a rise. Does that challenge your economic forecast? We were hoping, praying for a V-shaped recovery. Is it time to say the V could become U?
No, in the Reserve Bank, we have never given our projections or forecast of growth in terms of any alphabets. But having said that, you are aware that we have given a projection for next year, the growth rate to be, the GDP growth rate to be 10.5. Our research teams are currently working on the incoming data on the high frequency indicators. And as you know, the next monetary policy committee will come up in the first week of April or so. And we will give out our forecast on that. Now, I entirely agree that the renewed surge of COVID cases in many parts of the country is a matter of concern. But I think we have to also keep in mind that this time around, compared to where we were, let us say last year, March, or last year, April, this time around, we have some additional insurances against the impact of COVID-19 pandemic. The first is that there are 2 vaccines which are being rolled out, and the speed of rolling out that vaccine is, it's moving very fast, and about 5 crore people have been vaccinated. So that is number one. And number two, the second aspect is that overall the people are by and large more used to the COVID protocol. So one would expect the people, people who had, it appeared that they had lowered their guard, but I'm sure people will, sort of step up their guard against the spread of COVID pandemic. And third, at this point of time, one does not foresee a kind of lockdown that we had to, we experienced last year, because last year it came as a huge shock. This time we know what COVID-19 pandemic is all about, notwithstanding some new strains which have developed. So I would feel that the economic activity, the revival of economic activity which has happened should continue unabated going forward. And I don't foresee, although I should not be saying it before the details are presented before me by our research teams, but my understanding and our preliminary analysis shows that the growth rate in next year, that is at 10.5%, which we had given, would not require, I repeat, would not require a downward revision.
Can I say that a downward revision for growth is not required, but there is no need for an upward revision for inflation also, despite the fact that food prices and oil prices have gone up?
I can see the journalist in you, Nikunj. I will not bite that. I think you have to wait for the Monetary Policy Committee to give out the growth projections.
Governor Das, allow me to bring your attention to what is happening to bond yields. And it's a global phenomenon. They say never fight the central bank. But despite comments which have come from the US Fed early last week, and also what Reserve Bank of India is in a sense attempting to keep the yield curve under control, is there a question mark which has been raised now on central bank's ability to keep the yields under check?
No, I would like to say that there is no fight. I mean, there's no fight between the central bank and the bond market. At least I'm talking about India. And I have said earlier also that the relationship between the central bank and the bond, the bond market players, it's not, it need not be combative and it has to be cooperative. What we are emphasizing time and again is that there should be an orderly evolution of the yield curve and not sudden spikes or any knee-jerk reactions to certain incoming numbers. Now, government borrowing remains almost in the same region as it was, for next year, the borrowing numbers are the same as it is for 2021. But I have explained on a number of occasions earlier that, the Reserve Bank is there very much on the, in the field. And the Reserve Bank, I have given out the numbers. In fact, I have given the arithmetic of it also. And I would just like to repeat for the benefit of your viewers and the audience here. You see, the central government borrowing, the net borrowing is 9 lakh crores. And current year, we have done open market purchase of government bonds of about 3 lakh crores. So next year, it's not going to be any less than that. If at all, it will be, it will be more than that. So you have 3 lakh crores coming from OMOs, minimum 3 lakh crores. And we have also given special dispensation with regard to the, the hold to maturity dispensation, which brings in another 4 lakh crores. So 7 lakh crores is already available. and the gap is only 2 lakh crores. And we are confident that we will be able to manage the bond yields. All that we are emphasizing on and all that we would like to stress time and again is that an orderly evolution of the yield curve is very important for 2 reasons. Number one, a disorganized, disorderly yield curve evolution will act as an impediment for growth, will undermine the process of economic recovery, not just in India, but in all countries. That is why all central banks are concerned with this issue. And second thing is that why bond yields are important. Bond yields are important because they are the benchmark for the cost of money for the private sector. As you know, the private sector borrowing from the markets are benchmarked on the government securities of, let's say, 3-year or 5-year maturity, or sometimes 10-year maturity. So therefore, all that we are emphasizing on, and which central banks across the globe are emphasizing on, is the orderly evolution of the yield curve. You would recollect Jerry Powell, the Fed chief, about 2 weeks ago. He also mentioned about the orderly, the orderly conditions of financial markets.
Governor Das, let me bring your attention to the currency. India's Forex reserve, 4th highest in the world. What is RBI's definition of comfortable and surplus? Because that, in a sense, will tell us that what level Reserve Bank of India would like to say is necessary and what they would say is now getting surplus.
It's a dynamic situation. The first thing I would like to say is that there are 2 objectives in our Forex intervention. One is to prevent excessive volatility of the exchange rate of Indian rupee vis-a-vis the dollar. There should not be excessive volatility, and that is the main theme of our intervention in the Forex market. The second theme is that emerging market economies need to build up their own buffers. We have experienced and we have seen the adverse impact and the negative fallout of the taper tantrum of 2013. We cannot afford that kind of a situation again. Now, the expansionary monetary policy which the advanced economies are undertaking, at some stage, they will unwind and they will reverse. So at that time, the spillover impacts is maximum on the emerging market economies. And emerging market economies have nowhere to go but to look at their own buffers. So therefore, like any other, many central banks, Reserve Bank is also, we are building up our own buffers to deal with such situations. In fact, earlier, this approach was frowned upon by free market economists and those who emphasized very much on the market. But if you see the recent framework which has been brought out by the International Monetary Fund, IMF, even IMF has recognized that Forex intervention has become necessary for emerging market economies to deal with volatile situations and to deal with adverse situations. Now, what is an adequate level? 20 years ago, mind you, 20 years ago, it was viewed that 1-year import cover is sufficient. But there are various parameters and yardsticks by which the adequacy of Forex reserves is measured. Today, we have our import cover, our Forex reserves, they sort of represent an import cover of about more than 18 months, that is more than 1.5 years. But internally, we have no such target of reaching a particular level of Forex reserves. It all depends on so many factors, how the international situation develops. It's a very dynamic world, and we will have to deal with as the situation unfolds.
Governor Das, but looking at the fact that the economy or Indian economy is changing, PLI schemes, we are trying to move towards global competitiveness. Is Reserve Bank of India committed to keep the rupee competitive?
We will keep the rupee stable. The exchange rate, it's our endeavor always to keep it stable because certainty and stability is good for investors. It is good for importers. It is good for exporters. In fact, it is good for all stakeholders in the economy. It is also good for, thousands of Indian students who go abroad to pursue higher education. So stability of the Indian rupee is the fundamental principle which we tend to follow, which we do follow at the RBI.
Okay, I'll take the liberty of asking you 2-3 more questions more. I know I'm shamelessly extending my appointment with you. Governor Das, has the government taken RBI's opinion on which are the government banks which should be privatized, something which the finance minister referred to in the parliament when she tabled the budget?
This is a matter which is constantly under discussion between the central government and the Reserve Bank of India. And it's a subject which is constantly discussed. But yes, government doesn't need to sort of, yes, we had discussions definitely before the budget and more after the budget. So naturally, the process going forward, we have, the central government always takes into consideration the viewpoint of the regulator, and we are under discussion on this issue.
Is there a difference of opinion on cryptocurrency? That's the sense which we get if we look at what the Reserve Bank of India has stated publicly versus what we got from the finance ministry?
I don't think the finance ministry has, or the Reserve Bank, they have given any different points of view. All that we have flagged to the government, and I have reasons to believe that the government is in agreement, is that central bank digital currency is one thing. The cryptocurrencies which are being traded in the market is something else. Both RBI and government are committed to financial stability. We have flagged certain concerns around these cryptocurrencies which are being traded in the market. We have flagged certain major concerns to the government, and it is still under examination in the government, and government will come out with a decision sooner than later. I think that is what the government have, at various levels the government has articulated. I don't think there is any difference of opinion.
Governor Das, Bill Gates famously said, banking is necessary, banks or not. In this decade, since we are talking about the theme of this decade, how exactly is Reserve Bank of India ready for the changes which will happen? One side, you've got banks, the relevance of banks. Second side, you've got fintech. On the other side, you've got NBFCs, which are becoming fintech. Very dynamic changes are happening. Is Reserve Bank of India prepared for it?
That is why, in fact, this is precisely the background in which I devoted considerable portion of my address to fintech and to digital, digital appraisal of credit sanction, to digital appraisal, to digital methods of lending, etc. So going forward, the digital methods are going to play a major role, but the banking sector will continue to remain relevant. And banks have a major role to play. What I emphasized is that the banks also need to adopt new technologies and adopt the changes and the transformations which are happening in the world of digital lending and in the world of digital technology to remain in sync with the times. In India, I see a situation where the banks will continue to remain vigilant, but the method of operations of the banks, the method of working in the banks, for the banks to reach to sort of promote financial inclusion or to reach a wider segment of the credit market, I think the methods will be more technology dependent going forward.
Right. Final question, Governor Das, in this pandemic crisis, for you personally, what has been your most joyful moment? What has been your most painful moment?
Well, painful moment has been that, so many people losing lives. I'm not trying to sort of, this is something about which I'm saying this in all seriousness. I mean, so many people losing lives. Livelihoods have been lost. We have, many of us or our friends, we have lost our near and dear ones. So that has been a very painful moment. You hear suddenly somebody you know, or that he is no more. And so that has been a very painful moment from time to time when you hear such news. And the most joyful moment, well, the central banks have to always keep their fingers crossed. The central bank governor has to keep his finger crossed, be very watchful, should not should not ever bask in happiness or joy that the innings is over and a half century or a century has been scored, because every day is a new challenge.
Well, Governor Das, on behalf of everyone from the Times Network and everybody present here, thank you very much, and my sincere compliments to Reserve Bank of India. You've made the impossible look easy. Same time last year there was gloom and doom and there was fear. Now we are talking about growth. That time we're talking about depression and contraction. Really appreciate your time, sir, and thank you for joining us.